Barron's just came out with their 10 top stocks that will do well no matter who wins in November, and we're going to analyze a few of them. First company, Goldman Sachs. Makes sense. It's the biggest company in my market cap to make the cut. The stock is up more than 25% this year. Again, who cares what it's done lately? And in the short run, stocks are a voting machine. In the long run, they're a weighing machine. What if it was down 25%? Would that change the way in which you look at it? It should only change to you say, oh, it's down 25%. Maybe there's some value there. But to say it's up 25% is a good thing, I just hear potential overvaluation. Now, that could be wrong. It could be on its way to higher highs. But in the short run, the price movement does not matter. Stock number 2, Progressive Insurance. Cleveland's own Progressive Insurance. Well, everybody needs insurance. Whether you have a job or don't have a job, in order to get on the road, in order to have a house, you need insurance. And Berkshire Hathaway and Warren Buffett have very, very strong, good feelings about Progressive. They've definitely sit there and say that their underwriting is strong, which is a very important thing in the insurance community. Other ones, defense contractor, General Dynamics. Obviously, defense contractor, I don't care what party's in office. They both love wars. They both love going to wars. Beforehand, they'll say, I'm never going to go to war. Afterwards, they have every justification for war. Why? Because all their friends are on these big companies, need to get their contracts. They're all going to get it. As cynical as that sounds, I believe that's true. SLB, oil services, gold miner, Newmont, and several consumer discretionary stocks that, like Royal Caribbean, Lululemon, Skechers. Guys, cruises, high brand apparel. And by the way, Lulu's been hit pretty hard as of late. They don't mention that here, but to me, that's a sign to go look at them. And Skechers. I'm kind of surprised by Skechers. Isn't that funny? But hey, Skechers made the cut. Now, guys, obviously analyzing these companies is a very important aspect because if you overpay for a good story, it's still going to end up being bad for you. The most important aspect is about how much do you pay for that stream of revenue. And you may have noticed on our website, everythingmoney.com, that we only have a limited number of daily spots for our Everything Money community and software. And all these tools up here are the tools you can use to go analyze this company. Now, the reason for the limited spots is the software as exists today currently includes everything we have to offer for stocks, retirement, and real estate, all of these tools. But now we have 4 YouTube channels. And behind the scenes, we're making some really big changes as we continue to expand. These offers back here are going to be separated, and the current offer of everything is going away very soon. You may remember, if you've been watching us since we started, that I built this software selfishly for myself and my team so that we could use it to make better decisions in all aspects of my money and investing. But the channel and the community have grown immensely since then, so it's less about me and more about how I can better serve you and the community members. The good news is these changes haven't been made yet. So if you join today, you'll be grandfathered in for life with all the data, all the tools, everything we've made, and every future tool we do make. So after we split all these up, you will still get all of these and everything we do in the future, and your price will stay the same. So if you're really serious about making better financial decisions, increasing your returns, and sleeping better at night, click the link in the description below to get access to everything we have to offer before we make those changes. I'm very confident it'll be the best decision you made all year, and it'll help you analyze these very companies that Barron's talking about. Because nowhere in this do I see a future analysis of where the cash flows are going. Where are those cash flows going to come from? Is one more optimistic? Because remember, 22 seems expensive. 22 times earnings seems expensive. But let me ask you this question. If 2 companies are sitting here, company A, company B, and they both make $10, some might argue, okay, they're both worth $150 or $200 as a company per share. Well, wait a second. What if this one's growing at 20% a year and this one's growing at 5% a year? Who should get a higher price? Of course, this one, because they can grow that profit much faster. That future stream of cash flow is going to be so much greater. And once you understand that part, you're going to be a much better investor. That's the idea of paying more for better quality. It may feel like more, but it might necessarily be more. And if you've watched our videos from the beginning of our channel, this is something that I've definitely changed into. I went from special situations and struggling companies to finding great companies and paying a much higher premium for them. If you remember, Warren Buffett bought Coca-Cola in 1987. That's when he started buying at 30 times earnings. And he's made over 11.5% per year on his money, including dividends. That's a pretty solid return for 30 times earnings. So guys, let's take a look at Lulu. It's the one I mentioned that is, the stock is down a lot. Let's check this out here. Year to date, down 53%. 6 months, 48%, 3 months, 32%. It is a bloodbath out there. 5 years, it's only up 33%. But here's interesting. In 5 years, it's only up 33%, but in the last 5 years, they did $4 billion in revenue then. They did 9.8 this year. They did profit of $645 million back then, now $1.6 billion. So here's a company that over 5 years, the stock's only up 35%. And yet, revenue's up almost triple, profits up almost triple. We just did a video the other day in which Amazon it's actually down now over the last 4 years, yet revenue's up 55%, profits up 105%. Guys, because you have to pay a reasonable price for the company. Eventually the bull market will wane and you can't get that momentum going with you. So I look at Lulu and say, okay, Lulu had an all-time high of $516 at the end of last year. It's now at $238, well over half down. That's great. Analyst estimates, but yet it has EPS growth of 25, 14, 12, 13 and a half, 18, 18. If they're able to do this, guys, what's this company worth? What's this company worth if it's growing its profit double digits every single year? Revenue growth, double digits every year but one, if the analysts are correct. So let's go look at the stock analyzer tool, because this is where we put all of our numbers in to understand what the value for this company would be based on those future cash flows. Now, I didn't even do double-digit growth in my middle assumptions. I did 5, 8, and 11% revenue growth for the next 10 years. I did 14, 15, and 16% profit margin. Now, their free cash flow is a little bit lower in the last 5 and 10 years. That should catch up, but to be conservative, I put 12, 14, and 16. For my PE, I put 15, 17, and 19, and my desired return, 9%, because let's just see what the intrinsic value is. What's the market value for it? But guys, look at this. Increasing return on invested capital. That's a premium company. They deserve a premium multiple. I don't know if this is a high enough multiple. The reason I gave it a lower multiple is it's not exactly the oldest brand, and it's a great brand, don't get me wrong, but it hasn't gotten past the point of, okay, we're going to have Lulu for a long time. So I hit the analyze button. Boom. I got a low price of 166 to 195, high price of 406, middle price of 260 to 280. Based on today's price of 238, if you bought it, and my middle assumptions occur, you'll make about 10.5% return, including dividends if they choose to pay it. Now, the last company they mentioned, Block, owner of Square and Cash App. Now, Block has transitioned to also be about Bitcoin. You guys, crypto, in my opinion, is a speculative play. I don't think it's a store of value. I don't think it's a hedge against inflation. All evidence shows otherwise as well. And as we saw in recent market events, it is definitely not a flight to safety. When gold was down 3%, the markets in Asia were down 20%. And when US markets were down 10%, what was Bitcoin? They were down 25%. Hardly a place for safety. Hardly a store of value when you see that kind of fluctuation. That's my opinion. But they're making a big bet on the transaction part of Bitcoin. More power to them in crypto. But let's go see what their business looks like today. It's a $36 billion business, very low return on invested capital. $36 billion with $310 million a year in average free cash for the last 5 years, selling for 117 times 5-year free cash flow, 67 times price to free cash flow, but price to sales ratio only 1.5 times. 35% gross margin. Look at these low margins here for the bottom line profit. So I look at this going, I mean, revenue is growing a lot, but if crypto suffers, what's going to happen to their revenue? 43% of their revenue in 2023 for the fiscal year ending in, I believe, February of 2024, 43% of the revenue came from crypto. So where's crypto's next move? If it becomes part of society and part of what everybody thinks it is, it's probably going to keep growing for them. A nice bet for them. If it doesn't and it falters, what's going to happen to the revenue and profit? So even though these multiples seem reasonable, it's a lot of bet on a very risky and very volatile asset. So guys, no matter what stock you're looking at, whether it's one of these 10 that aren't going to be affected, at the end of the day, I don't believe that the presidential history shows that money is made based on who's in office. What I believe is money is made based on price relative to value. That's been shown time and time again. If you ask the best investors of all time, they are bottom-up investors, which means they worry about the company and paying a good price for a good business and letting it ride from there. So if you want to find out how past presidents and these two presidents have affected the market, please watch our next video. Thank you for your time.